We were having a conversation earlier that the case is being made for either somewhere between 100 basis point hike next time or no hike. So we've got a wide range of opinions. Some people think that commodities are already rolling over and that we need to be careful already about dampening demand too much. Others think, prices are still surging and we got to get it under control. What do you think we need to do? What do you think the Fed will do?
Joe, 2 points. One, even when they last time when they moved up by 75 basis points, I had recommended publicly that they go up 100 basis points and cut QE, reduce the bond as holdings by $100 billion per month and start it off immediately. Of course, they didn't do either of those. It was just 75. I expect there'll be one more 75 coming at the end of July, as Fed President Loretta Mester talked to CNBC a few hours ago. I don't think anything more is going to happen. Here is the problem. Yes, some commodities are turning over, but the others are not. Fuel is not. Fuel is again, oil prices, crude prices are again up today. And food prices are not coming down either. Rent is going to keep accelerating. These three components of inflation are going to be very significant. They will keep both the inflation rate and the Treasury yield high. So there is no way the Fed can relax, even if it ends up in a recession. You have to face a recession for a simple reason. You, the Fed, misjudged inflation more than a year ago, and it is like you're doing penance today. There is no way out for you at this stage because of the seriousness of the error about calculating inflation.
So we lived a little too well, I guess, and it wasn't based on something that would be lasting, something that was actually economically viable, I guess. And we should know that, Sri, that the Fed cannot make our lives better. It can make it feel better for a little while, but you need the actual economic activity from the private sector, which is how you make gains. So we have painted ourselves into a corner right now that it's going to be difficult to get out of. Let me ask you this then. The markets have already reflected a lot of this, and individual names, a lot of the biggest high flyers, a lot of air has come out of those. At 3,800 or so on the S&P, what's a more realistic number for that would, in your view, reflect these issues, these problems? Is 3,500, 3,000? Where does the grind lower take us?
To pick a number, I'll pick somewhere in between the two numbers you mentioned, something like 3,300 on the S&P. So you have still quite a way to go. And also the VIX index is, I think, still low. There is not enough panic in the market. There is not enough blood on the street. And until that happens, that is not the end. The capitulation has not happened yet, Joe. And that's why the Fed has to keep acting. And until the financial markets come down and you have a final capitulation on the equity side, inflation is going to remain high. And here is one key issue. The Fed has two mandates, supposedly, growth and inflation. But it has generally behaved as if it has only one mandate, growth and boosting the equity markets. It is time to switch to inflation, and since it is doing it so late and for the first time in a long, long while, they have to do it for a lot longer, even if growth suffers. That's the tragedy of the situation.